In a fortuitous bit of timing for the government, Macarthur Coal stocks jumped 37% on news of a $5 billion takeover offer. As Lateline Business reported last night, US-based Peabody Energy and steel giant ArcelorMittal have launched a joint bid for the company. The announcement was made just a day after the federal government unveiled its carbon tax scheme. Emily Stewart reports.
If completed, the $4.7 billion deal will be the largest coal acquisition in Australian history, and Prime Minister Julia Gillard was quick to take advantage, saying the offer is proof the carbon tax won't kill the coal industry.
Peabody is the big American miner that operates here now and wants to do this major takeover because they clearly see a profitable future for mining.
The whole purpose of a carbon tax is to close down the coal industry. The Labor Party is not being upfront with people about that.
Analysts too are divided over the impact of the carbon tax.
It's quite clear evidence that the increased certainty of a carbon price is impacting on corporate decisions in a positive way.
For very top drawer assets, we're really seeing there's still willingness of foreign acquirers to buy those. Where the impact is probably going to be more felt is really in the more marginal mines, where this additional cost could be the difference between early closure or not.
The joint bid by Peabody and ArcelorMittal of $15.50 a share is at a 40% premium to Monday's close.
The bid that's been made has got a minimum acceptance condition of only 50%, so it is quite possible for this bid to succeed and for ArcelorMittal and Peabody to get control of the company without the support of the other two major shareholders, CITIC and POSCO.
Macarthur is the world's biggest producer of pulverised coal, and steel giant ArcelorMittal already has a 16% stake in the company.
If you put yourself in ArcelorMittal's shoes as the world's largest steel producer, they may be happy simply to gain control and secure access to Macarthur Coal's substantial metallurgical coal supplies.
Macarthur wasn't available for interview, but in a statement says the board makes no recommendation in relation to the indicative proposal, but will seek to engage with Peabody and ArcelorMittal in relation to the price and terms. Macarthur Coal has been a takeover target for some time, with a three-way bidding war erupting last year. Peabody emerged as the highest bidder at $16 a share, but the deal fell through when Peabody reduced its offer when the mining tax was proposed. However, continued strong demand for coking coal for steel making in China and India has led to high prices.
It's a great vote of confidence in the way that the world's looking at particularly coking coal. We're in structural shortage at this point in time, and that's really promoting really asset values that we're seeing coming through.
And there's likely to be more consolidation in the industry.
Any of those countries which are really short on coking coal as part of their steel expansion plans will continually be looking for coking coal assets, and we've certainly seen that increase in production coming out of Korea, China, India and even Brazil, and they would be all scouring the world for valuable coking coal assets.
Peabody and ArcelorMittal are set to begin due diligence on Macarthur shortly.